Welcome back, and joining us on the show now is Peter McGuire, CEO at XM Australia. Peter, hi, good to have you again. And a difficult day at that, and difficult month at that, because most of the commodities that I'm looking at are ending this month yet again in negative. I want to start with the crude oil prices, because come next week, and it's going to be the OPEC and allies meeting, which the markets are watching with keen attraction. And then we have the hurricane and the category storm to Ian as well to react to. How are you reading into both of these events?
Well, good afternoon, Manisha. I think I'm reading into it that it seems to be a continual bear market sell-off, and what we're seeing as far as equity markets, we've got the hurricane and the issue there with Hurricane Ian and what impact it's going to have to production in the Gulf of Mexico. Secondly, of course, yes, OPEC sitting on their hands going, well, where do we move? What's the next point? Inflation really galloping, and you've got the pound and what's happening as far as US dollar strength, Manisha. So all cards are on the table, and yeah, someone's holding, I think, a royal routine.
You know, I remember a couple of months ago when we spoke, it was a kind of a scenario that crude prices could have gone to 125, it could have gone to 75 as well. I mean, that's the kind of world we've been living in. But now that we have seen 100 and 90 and 80 break as well, what's your sense on where are we headed?
Well, I think we're 77.80 on the screen at the moment for WTI, Manisha, and you've got about 85 and a bit for Brent. I think that there's every chance you're going to see in the 60 handle as far as WTI, a high 60s. Too hard to really speculate where, because there isn't really that much room to move down. I think there's going to be a lot of concern if it starts to get into the 60s. There'll be OPEC will really come to the fore. They're being paid highly. If you're getting US dollars, then that's a very big win. But if you're paying some other currency, then that's a handbrake like no other.
Oh, well, absolutely. And not just crude, the kind of sell-off that we've seen in metals as well, where in the last 1 week itself, you know, any one of them is down between 5 to 10%. Would you be concerned here as well? Do you think it's oversold in some sense? Are you buying anything at all in that segment too?
I think it's a time to be short. I'm looking for consolidation as far as what's happening with base metals and that copper market, the tin. There's opportunity. I think at the time to be it is probably short at the moment, Manisha, more than long. And, you know, we're going to get a clear direction over the next couple of weeks. But there's a lot of information and data points that have really got to hit the market so we can get some sort of bullish momentum up to make us feel joyful leading up to Christmas.
All right. You follow currencies very closely, Peter, and the last couple of months, the last 1 week itself has seen more and more currencies move to all-time lows, definitely multi-year lows. What's your sense on dollar index? I mean, we've done 114.5 and plus kind of levels, some consolidation or decline coming in from there. I mean, is US going to get bothered at all with the kind of strength that the dollar is showing?
Well, absolutely, Manisha. There's no doubt about it. I mean, you know, when you're looking at all these companies that have got earnings offshore, so it's going to be a certain handbrake again to earnings. You've still got PEs running at about 21 for the S&P. Your long-term average is about 14 and a bit. So I think that where it's running at the moment, I'm looking at possibly even up to 117 as the new handle for US dollar index, currently at about 113.50. And what we're seeing as far as euro is 94, the new handle, 0.94. And when do we hit parity for the pound? We're already at 145 for that yen number. Everything's being cratered as far as every other currency against US dollar.
And how long do you see this scenario continue to play out?
Oh, well, I mean, Fed Chair Powell's got one agenda, and that's to take us back to 2% inflation. So that's going to really, you've got to ratchet up rates quickly. I'm not sure how much further, you know, the Fed wants to be before December 31. If it wants to really knock it up 1.5% or even 2%, and that's going to push more momentum to the upside as far as currency. So that US dollar, I think, has got more momentum yet, Manisha. It ain't over.
And we're not even talking about the midterm elections in US in November anymore. I mean, do you think any major changes could be coming ahead of that?
I won't be surprised. I'm looking forward to hearing, you know, how that all starts to really gain momentum in the next couple of weeks, because we're only, you know, 5 weeks out. So I think it's going to be dramatic, and it's, yeah, I'm looking for possibly some surprises. And Biden's got his hands full when you think about what's happened with border crises and certainly inflation and currencies, and look at the equity market collapsing. So, yeah, it's not a good sign for President Biden at the moment.
Okay, not a good sign for President Biden. Thanks a lot for that, Peter and Manisha, for joining in and giving us a quick update on what's happening in the world of commodities. In the equity markets, though, the market has recovered. So that's a sign once again of resilience that we're seeing. The mid-caps are in the green. The Nifty is up 70 points and now moving towards that 17,100 mark. With that, it is a wrap on Halftime Report. Business Lunch will take all the action ahead. Stay tuned.